Everybody, it's Pete. Good morning. It's Monday, August 3rd. Welcome to August 2020, obviously. Interesting day setting up today. Last week, especially Friday afternoon, if you stuck around to the last 2 hours of the day, if you happen to be a day trader, boy, we had some explosive moves. Congratulations to everybody in the boot camp. It was probably one of the biggest high five afternoons that we've had in a while, which is kind of rare sometimes on a Friday afternoon where everybody's kind of checking out. But we had a couple of really good trades. Specifically DocuSign for the week, OSTK, which has been really printing money in a big way, and Apple was just amazing. I can't say anything else about it. We called the trade out probably around 10 minutes before it happened. And this is the reason you want to learn how to read the tape. It finally hit a level that we watch. You work during the day, you set your alerts, you can be working. This is a big question I get all the time is, well, I miss my trades. How do I make sure I don't miss them when they hit the trigger? You have to set alerts. You have, even if you use a buy stop, if you set an alert, all during the day, you're working the keyboard, and bam, once it triggers, you don't miss it. But here's the thing. When a stock is interesting to you at a certain level, you don't want to have your alert set right at that level. You want to get alerted before it gets to that level, so you pull it back up, and now your attention is on a trade that's potentially explosive. And I'll show you the chart in a second, but Apple just exploded into the close on Friday. I believe it was probably the last 45 minutes of the day, maybe a little bit. It felt like 45 minutes because it just kept going and going and going. But this is the point. The point that I want to get across is when you're prepared, and I actually heard somebody else say this over the weekend as well, which I'm very happy about. Trading is not hard after the market opens. Trading is not hard after the week opens. The hard part of trading is what we're doing now, which is identifying good opportunities. And then when the market opens, you're basically just sitting back and looking for entries. When the week starts and you're managing your swing trades, you're basically just sitting back looking for entries and managing those positions. If you're all over the place with alerts all over the place and stuff, it's going to be very hard to be consistent. And that's what you want. You want control over your ideas. You want to fully expect that you know what you're doing every day, which, again, that's the whole point of us working together, right? And if trades unfold, you want to have 100% control over the outcome. And I just covered in a previous Stocks for Breakfast video that there's 3 different kinds of stop losses. There's the initial stop loss after the trade, there's your break-even stop loss, and then there's your profitable stop loss. Once you understand and learn how to manage those 3 types of stop orders, then trading is just put it on, manage it, put it on, manage it, put it on management, assuming you have a trade where the probability is good and the risk reward makes sense. We're going to discuss some of the bigger trades today. A lot of people are obviously looking at the earnings that were from last week in the big 4, the big tech companies. Microsoft is also in the news. That's going to be the #1 stock we're going to pay attention to. And again, at what level does the trade make sense because of the buyout with TikTok, or at least at this point, it's potential buyout of TikTok. And then we're going to get into a few other ideas. If you find these trades helpful, especially if you like the channel, please click down and click subscribe. And if you'd like to trade together in real time for 30 days, definitely click down and learn more about the bootcamp as well. So let's actually get right over into the charts and take a look at some ideas. If you didn't see the news on Microsoft, there's a potential acquisition of TikTok. From what I read, they're still negotiating the deal. But here's the point. And this kind of really drills home what I was discussing in the previous Stock for Breakfast video. The stock is up $4 right now. It's trading around 209. And this resistance level where it's having a hard time getting through, you can see it failed here, got through, failed, got through, came right back in, tested it, failed, 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 failed. So this is the real number, 212, basically. Let's just say it's 212. Not all the way up here, not the all-time high. This is the level price is struggling at. Right now, pre-market is trading at 209, which is only a $3 profit potential. The better trade for me in Microsoft is above 209, and then the next day the stock going well bid. And if you're not familiar with how acquisitions normally work, technically the stock doing the buying generally goes down. This could be seen as a much longer term play. So be aware that there's a possibility of it popping, the deal going through, selling off, and then over the long term, the trade would look a little bit better as more of an investment or quarter by quarter, what we might call position trade. So setting up other trades, you're looking at Facebook. Obviously, Facebook finally exploded through the 240 level with exploded is really putting it kindly. So really the bottom line is, what do you do now? It went from basically 233 to 253, roughly a $20 move ballpark in that area. The right trade now is you need for the stock to pause. It's very hard to justify a stock in a trade of $20 looking to buy the next day I would be looking to get it closer to the 240 level. I'm not sure we're going to get that much, but definitely the qualifying thing here is let it pause for a day or two and then find a better stop, a better place to enter. Apple, actually, I was long here last week, and I ironically ended up taking a small loss on the trade because it just didn't bounce when I had the trade, and it didn't justify it. There were some better opportunities. So what do you do in Apple now? It's obviously trading higher again today. It's right now it's around 429 and change. Is a new swing trade in Apple a good idea right now? No, absolutely not. Let the stock pause. Again, I get asked this all the time. Why are we waiting for a pause? You're waiting for a pause so you could manage the risk. Where are you going to manage the risk right now? You're going to risk $25 on this trade? Don't. It's not necessary. Don't let the fear of missing out impair your judgment in a good idea. Let the stock pause for a day or two. And obviously, then we also had Google and Amazon. Alphabet, I should say, right? Alphabet's a little bit different. Alphabet's actually in a $50 trading range. I don't like Alphabet until it clears 1550 on the daily chart and gets above there. And obviously Amazon is the last one. Similar situation here where, again, you'll hear me say it often, this is the right price. So what's the right price? That's where it's having a hard time getting through, and that is where it keeps pausing and finding support. So it's got to get out of this range. We said last week we don't like it unless it's over 3,200. That is still in play. DocuSign is a trade that we had last week, and again, it's for whatever reason, some of these stocks are they're in our list every day, but for some reason they give us 2 days where it's just super easy to trade, and the trades just kind of fly off your fingertips. Now what do? Now it's actually breaking out. So again, if you're paying attention and you're a regular subscriber of the channel, you know that now with the stock breaking out, especially for it breaking out to new highs, we need to see the stock go well bid today and stay above the open price and stay above yesterday's close, Friday's close, in order to warrant holding on to the trade. Failed breakouts can be very painful if you're not disciplined. So you know now, 3 hours before the market opens, what to do on this breakout. Whether you're day trading it or swing trading it, it needs to stay above the breakout level, it needs to stay above the open, and it needs to stay above Friday's close to justify it. Best case scenario, if you're long from lower levels, which a few people in the boot camp are, you need to make sure that that stock closes well bid and above the open. A couple of other trade ideas that we're looking at today. IAA setting up a breakout at 40. Now, what's interesting is 40 to 52 is the trade. So we actually have a decent pullback here. So we're going to actually work this trade in 2 pieces. Because we know that this resistance level here around 45 is the level, we're going to be looking to bid yesterday's low for support with only half of our position, and then looking to add above 45, looking for a swing trade up to 52. Run was in our list last week. We actually were looking for this pullback to find support and bounce a lot harder than it did. It actually didn't. So I'm going to be a little bit more conservative here and wait for the stock to go well bid on the daily chart, which means higher highs and higher lows. So for me today, Run doesn't have a trade. I want to see it hold the bid a little bit better. Kellogg actually has a really nice pullback. This is actually one of my favorite setups where a strong stock that breaks out, hit resistance, again, really knowing your levels, right, multiple time frames, has now pulled back. I'm looking for it to bid around 68, which means a lower opening in the stock. If it opens higher, we're still going to be too close to that 72 level. So I don't want to get it near 69 or 70. So I want to see it open lower, look for a spot to bid, and then bounce as well. Skyworks Solution, SWKS. Again, very similar. If you're trading breakouts, you have to have your big boy overalls on, your big girl overalls on, and breakouts have a very high profitability when they follow through. They have a very, especially in today's market right now with so much indecision, you're going to have a lot of false breakouts. So you got to be able to handle false breakouts in these stocks if it follows through. So right now what we got is we got well bid, we got a breakout and well bid. So that's what we're looking for in these breakouts. Now it looks like it's opening higher. So now the stock actually just went from basically 133 to 148, a $15 move. Trading this breakout and Friday's well bid close was the entry. So this is the signal, this is the entry because the stock went well bid. It's already up $2 and change now, almost $2.50. Today is not an entry in the stock. Again, you want to find a better spot to get in. However, I'm pointing this out so you can identify the best breakouts with the highest likelihood. This would have been a trade to get long on Friday because of the breakout. The next day was well bid and followed through. Very important there. Twillo, another one that we like today as well. Very similar situation, but today is the first day of the breakout. So now we want to see today go well bid and then look for a spot to enter. W was a really nice trade last week. If you take a look at where it happened from Monday through Friday, just a phenomenal day. Today, I'd be, if I was swing trading W, not position trading, swing trading it, and we got to push up the open higher today, I'd be looking to book a profit, very similar to what we called last Friday in AMD, and AMD sold off the entire day. So today's a day in W to be looking for profit taking or continuing to move up the trailing stop. GSX, excuse me, I'm typing everything wrong today. GSX actually is an interesting one. For those of you that like technical patterns, we essentially have an ascending wedge today, and I'm not really a big pattern guy like this, but these tend to break out because you have hitting resistance, and you're continuing to make higher lows. These tend to break out. You can see it's already over 90 and has plenty of room to go because that takes us into all-time highs. Again, before anybody asks, how do you manage all-time highs with the trailing stop loss? You are literally off the chart. That is the profit target. Newmont is setting up. I'm not going to bite. The stock tends to fail at breakout levels. You can see that here again. We broke out here and failed. I'd rather wait for a 2 or 3 day pause above this level before I got involved and look for new trade there. So that has to stay in your watch list. And CHWY. CHWY is one that we've been trading a decent amount this year. It's only a swing trading stock, not a day trading stock. So again, knowing what you need to see versus what you don't want to see. So breakout went well offered. That's not what you want. Breakout went well offered. That's not what you want. Breakout went well offered. That's not what you want. So now we have another breakout. So what you need here is another green candle with higher highs and higher lows. If you get that, it sets up another swing trade. So a lot of opportunity today. I think in those stocks that had earnings on Friday, the big tech stocks, I tend to be staying away from them today because of how far and how fast they went. However, they have to be in our watch list this week to set up some trades. Quite a few breakout scenarios today. Make sure that you wait for good ideas, especially in that Microsoft one. We gave you the exact levels today. It's a question of being patient to set up reward potential that makes sense. If you'd like to trade together for the next 30 days, definitely click down and learn about the boot camp. I'm very excited. We had a bunch of new people that joined this week and this weekend after watching last week's live training. Have a great day, everybody.